name is Kai Hoffmann. I'm the @JR Mining guy on Twitter, the CEO of the SOAR Financial Group, as they introduced. And part of the SOAR Financial Group is Oren Inc. We're a data company. We track financings in the sector, and we have a really good feel of what's happening in the space pretty much on a daily basis. Let's get you educated, and let's talk about how we can capitalize on high gold prices. First, a bit of an overview, because it's really important to understand who and what Oren Inc. is in context of the data. We track all the mining companies on the TSX, TSXV, and CSE. We've tracked close to 40,000 deals now and have them in our database. And we have an in-house data analyst that goes through press releases manually on a daily basis as well. Next slide is really important because when I talk about numbers, this is our coverage universe. We only look at companies that have a market cap of $1.5 billion or less, or financings that are below $100 million. We don't look at debt financings, royalty transactions, stream transactions, or anything like that. It's all pure equity driven. And the focus is really the junior mining market. We're not looking at what VRIC is doing and how Kinross is financing and refinancing some notes. We don't care. We care about the juniors, and that's our data. One thing that makes us unique at Oren Inc. And that nobody else has in the industry is our Oren Inc. index. We track the market, as I said, daily, and we put this out weekly. We're telling you on a weekly basis how the junior mining market is doing, how are they raising money, and one thing that's really important is the 5-week average as well. That's the purple line there. That's giving you a really good overview what the trend is right now. You can pretty much overlay that with the gold price, and you'll get a pretty accurate picture actually how well the market is doing. But it's really interesting to see because sometimes you have those spikes, and I'm not sure of that. Oh, that actually works. You have those spikes where like a bigger transaction or a bigger financing or a bought deal can mess with the numbers a little bit, but that makes it also exciting. A couple of things to keep in mind. There's 3 factors that are weighing on it. It's of course total dollars financings opened. The percentage of broker participation is really, really important because if the broker can make money, he'll sell your deal, and he's not going to sell something he can't sell. So he wants to make his commission, right? And then, of course, the total number of deals opened. For me, a lesser factor, because anybody can open a financing. The question is, can you close it, right? So that's really, really key. And I'll get to the closings in a second. Clear so far? Perfect. All right, let's talk about numbers. And this slide really surprised me. Who made money in the junior mining market last year in 2023? Show of hands, real quick. Who made money? Wow, I see one, Mike. Okay, only because you get a salary. Yeah, so one legit and one who got lucky, okay? But look at the numbers. Like my gut told me and sentiment told me it was a terrible, terrible market. The numbers tell us something very different. We actually raised more money than in 2022. We raised $4.6 billion last year within our coverage universe, and that's up. That's up $500 million from last year in 2022. I wouldn't have thought that, personally. My gut told me, it's like, okay, this should be closer to 2.5 to maybe 3 billion. It wasn't. But I'll come to the context of that and why that is and what it actually means as well. But if you look at the historical average, we started, by the way, Oren Inc. in 2011. We're up there. This is one of the top 3, top 4 years we've had the last 12, 13 years. I wouldn't have thought that, personally. By the performance of my portfolio, my personal portfolio, and the market, very, very surprising. And a big part of it is as well, like 1 billion of that was flow through. That's a Canadian specialty. But still, it's a big component. Let's look at that. It's like I brought you the gold price versus our monthly breakdown of financings. And you can see a bit of a correlation. It's like it's not 100% accurate because as I said, like if there's a bigger deal done, also in the lithium space, for example, it still gets picked up here. But you can see a bit of a trend if you overlay the months, especially the last 3 months, October, November, December, where we've raised more, that's actually X flow through. So the Canadian tax specialty model is actually taken out of that. So you can see that October, November, December, when the gold price started taking off, a bit of traction came back into the financing market as well. So we see that picking up. So there is that correlation. I mentioned banker and broker activity. Really shocking, it's doubled in 2023. We've seen twice as many brokered deals and almost twice as many bought deals as well. But when usually brokers and bankers get involved, it's usually later stage. You don't see the grassroots, early stage, 5 million market cap company come out with a $10 million bought deal or something like that. You don't see that. So the brokers get involved in the back end or the later stage of the companies. And you'll start to understand the picture that I'm trying to draw here, what the market situation is and what we're looking at. So total number of deals also up 25%. Is that necessarily good? I don't know. Because one thing I do care about, and I'm going to jump through this slide, is this. It's the average deal size. Like how much is being raised per deal, and it's down. Meaning there are a lot of smaller deals happening as well, and it really draws that bifurcated picture that I'm trying to hint at. I've been trying to hint at in the last few slides. There's later stage deals, later stage developers, later stage explorers that are raising bigger chunks of cash that have been really pushing up the index. And then we have the small deals that are really hurting, like the grassroots explorers. Let's say Mike Berkey goes out to Alaska, says, I want to test a theory, I need $1 million. Mike's not going to raise $1 million, sadly. Mike's great, but he's not going to raise $1 million. That's just the state of the market, that's the sentiment. But if Mike were to raise with he's the CEO of, I don't know, let's say P2 Gold, because I'm just looking at it, and he wants to raise $50 million and start producing a feasibility study and go down that route, you'll get $50 million. That's the picture I'm trying to draw here. So that's where the market is bifurcated, and that's what we're seeing overall. If you walk around, people complaining about the financing situation, look at their market cap, look at their stage, you'll understand the picture I'm trying to draw here. $3.2 million is actually not too bad, but we've seen a lot of canceled deals last year as well, where we've seen a lot of companies say, hey, we want to raise X, and they raised zilch, right? So 68 canceled deals. Personally, it's like I haven't really paid attention to canceled deals the last few years, but this time it really jumped at me because we had a lot of zeros in our database. And I was looking at that. I was like, okay, that is extremely high. And I've noticed that as well, just going through press releases and tracking the news wires, that a lot of deals have been canceled or even repriced and repriced lower, most importantly. So it's definitely not the highest, but $3.2 million is still much higher than what we've seen in 14, 15, even in 19. Look at the overall dollar value raised or the per deal. It's actually not too bad. But again, it shows that bifurcated picture. Let's talk flow-through financings. Again, we're in Canada here, so we can bring that up. But when I present in the US, that slide is kind of meaningless. But it does show that the flow-through financings are still a bit of a life support for the Canadian mining industry. And it's dropped, the importance. I used to say maybe it has to do with political and jurisdictional issues worldwide, especially when in 2021 people couldn't invest worldwide anymore, and South America fell to the wayside a little bit because of political situation, that a lot of money was used and spent in Canada on Canadian projects. And I think that sort of explains the jump from 16.8% to almost 24.5% from 2020 to 2021. And we're still at a high level, 22.6%. A few changes happening. I'm not an expert. I see a lot of people from Pear Tree walking around, for example, but there are some changes happening through the flow-through tax regime. We might see a lower number this year. That's just my guesstimate, because a lot of flow-through is raised also by smaller companies, and those smaller companies are just having trouble finding traction and will need twice the amount of donors to sort of cover the shortfall. So that should be interesting. I mentioned that. Again, I'm not an expert, and you'll require more income to donate the same amount. And the donation amount is pretty much contracting. So you'll need to find more donors. And as long as the sentiment for the juniors, especially the grassroots explorers, is, what you say, like abysmal, you'll have a hard time finding more donors as well. So one last thing on that, like when the changes were announced, I think it was in October where it was finalized, we saw a lot more money go into flow-through financings than we saw into hard cash financing. So a lot of capital went that way while it could. I don't see that trend continuing. So that's just a snapshot in time. But it shows a picture that there was a lot of money sitting on the sidelines and they were forced to invest. But where's the money flowing as well? It's interesting because in 2011, we've seen a bit of a changed picture. And the topic I'm trying to hint at is that the battery metal space has been picking up and stealing a bit of the butter off the bread for gold and precious metals in general. If you look at copper financings, they were extremely strong, especially in the early part of 2023. That was before the recession fears really hit. Now that recession fears are dominant, not just in mainstream media, but everywhere, and all the market commentators and keynote speakers here are talking about recession, de-dollarization, and all the other fine topics, copper has been getting a lot more attention, and or less attention, sorry, towards the latter half of the year. But still, it's one more deal of the top 30 is more copper related. Gold has dropped from 13 deals in 2022 to 11. It's just interesting because gold used to be almost 50% to 60% of overall money raised if you look at all the deals, and that's still true. It's just a snapshot of the top 30 largest financings. But we see copper sneaking in there. We've seen a lot of big lithium financings as well. So there's a bit of a trend change. I sort of compared it to the US dollar losing its world reserve currency status. It's happening little by little by little by little. Gold is losing its luster, at least on an investment side on the junior exploration side. Value creation, I think, is a big, really, really big topic in our sector. And I was chatting with a few people beforehand as well. Offering sizes, I think, is a big key indicator. Small companies try to raise small amounts of money so they don't dilute. But you as a shareholder and investor, you need to think about what kind of value are they providing me for my investment dollars. 51% of the deals in 2023 were below $1 million in financing size. 68% were below $2 million. You tell me what you can get for 2 million Canadian dollars these days in terms of exploration. Like, how much do you need to be successful? Okay, listing fees, director fees, management fees are $500,000 easily. Depends on who it is. So you got to think twice about investing, because you don't want to just cover somebody's G&A and to maybe year-end bonus, right? You really want to pay attention to how you can get value out of it. So I've been saying, if Mike wants to raise money for a feasibility study, he'll get the money because you have a clear plan, you have a deliverable, you create value. If you go out and try to test a theory that's unproven on a property that's never been drilled, you're struggling. And that's exactly reflected in those numbers. All right, go big or go home. Coming back to the same picture here. You have to make up your mind if you want that or not. We have one company, I think they're just outside here as well. I'm a shareholder, Fireweed Metals. They did a massive deal with the Lundins, 40% dilution, really raised a lot of money. They actually added more capital recently since that transaction, and the stock is up. Faraday Copper, when I first put that slide together, they were up. They're down a little bit. The Arizona copper deal in Arizona is a little tougher, especially mentioned the recession fears. Copper is not the most loved metal right now, at least among some of the investors. So, but you have to understand, like they both companies had a clear deal, a clear plan. Sorry, not deal. A clear plan of what they wanted to do with the money. The investors loved it. They gave them the money. Yes, they diluted, but they're achieving a goal. So you as an investor, as a small retail investor, could actually make money alongside them. So one other trend we're seeing, of course, right now that we definitely see continuing into 2024 as well is consolidation. It seems like it's taking longer for ecos to be put in check because we're seeing a lot of smaller financings or smaller companies maybe even throwing in the towel. We've seen a smaller transaction last week where Alamos bought a smaller explorer for about $28 million or so. Where it seems like the CEO just threw in the towel because he couldn't raise money. I'm sure we'll see a few more of those, but it's a lot ego-driven. There's a lot of consolidation talk in certain camps, but the question is who's going to run the deals, who's going to put it together. So until companies figure that out, it always takes time. We'll have to wait for a few more deals. That's my whole point. But the trend is there, and I'm really liking what I'm seeing. A lot of consolidation, a lot of sense, a lot of deals that make sense, like Adventus Mining and Luminex, for example. Just makes a lot of sense because they have a lot of synergies in country. All right, lack of volume. I've stolen that chart, or at least the idea for that chart, from Small Cap Steve on Twitter. Happy to give credit because he's the one who compiled the data and put it out. I just updated it with the final numbers for 2023. Volume completely disappeared, so sentiment is in the gutter and was in the gutter last year. So we were not wrong with our gut feeling. And like the volume on the venture dropped down to 13.2 million. That's, of course, across all sectors on the venture. But as you all know, the venture is mostly consisting of mining and energy companies, so draws a very clear picture. CSE is even worse, to be honest. So just that's what it is, like 32 million or billion in transactional volume in 2021. You make up your mind what you thought or what you think what sector attracted the most attention there. But the volume's completely dried off. $5 billion in transaction volume in 2023, that's peanuts. All right. Some of you really liked me giving you stock ideas, and I want to review some of them I gave. I don't mind showing the performance because we've all in the same market. And I think the presentation was recorded as well, so there's no way for me to hide anyway. So might as well talk about it. But I still stand by those calls I made last January as well, of course. Ares Minerals disappointed me a little bit because they brought in tech just a few months prior, but they couldn't really deliver on or execute in Kazakhstan. Sort of in limbo mode. I still like it. I still actually own the stock because I still think Kazakhstan is an interesting jurisdiction. Banyan, they're out here as well. down 34%. I managed to, I think, top tick this stock when I bought it personally. I bought it at 48 cents. They're at 32, so I'm doing really, really well there. But Fireweed Metals, I brought the example earlier, a stock I recommended also in May 2022. We're up about 114%, and then Montage Gold, 10.3% down. But it's pretty much flat. They put a feasibility study out last week. So, but I'll give you some tips for this year. And you know what? They're the same tips as last year. And you know why? Because the story's gotten better, and I still like the stories, and I still own all of them. Banyan Gold, I think I've been to the project 5 times now. One of the easiest projects I've ever seen, to be quite honest, unless you're in West Africa. It's right on the road, infrastructure is right there, and they've got 6.2 million ounces. When I recommended it last year to you, they had 4 million ounces, or 4.2 million ounces. Don't nail me down on the exact number, but they've added roughly 2 million ounces in the last 12 months to it. The deposits are now connected. They have $7 million in cash. I'm sure they'll probably raise a bit more money before the season really kicks into a higher gear. But that's exploration. I'm not worried about that. So that's one of my top picks, 31 cents, 89 million market cap. Another one, Fireweed Metals, still. Its story is fantastic. It's getting a lot more attention now, also in the US, due to US grant money being available also for North American, Canadian projects. Especially on the tungsten side, that could be really interesting. A lot of results still pending from the zinc targets, the boundary zone. They just put out their best hole to date, I think it was last week, 144 meters at 14.45% zinc. Really, really interesting with $1.16 right now. Just a measly 170 million market cap, roughly 40 million in cash. Landine's bought into it. Tech owns 8.3%. The Childress family, great supporter, owns about 12.8% as well. That's exactly what you want to see. The company will not run out of cash because they have got strong backing. That's something, as a retail investor, that's what you want, because you don't have to worry about it dwindling down to zero. And last one, back at it, Montage Gold. West Africa, Ivory Coast. I've been to the project myself, 68 cents. As I said, it's a clear takeover target in West Africa. There are not too many shovel-ready projects. They have a permit in hand. They added some more ground recently from VRIC, updated the feasibility study, over $1 billion in NPV. IRR is 31%. The only drawdown or downside, like criticism, I'd say, is maybe $700 million capex is a little higher than usual for projects in West Africa, but it's also a fairly straightforward project. Follow us on YouTube, follow us on Twitter. You can follow me on YouTube as well, at Soar Financially. We host a lot of macro conversations, Gold newsletter channel together with Brian London. We host company interviews, so make sure to join us there. Hit that like and subscribe button, and really appreciate everybody's attention. Thank you so much, everybody.